Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Wednesday, January 28, and this is your London Open Prep. The dollar is bouncing back ahead of the Federal Reserve decision after a politically driven drop. Gold is setting fresh records, and hotter Australian inflation is nudging markets toward a rate hike down under. Let's start with the global macro picture. After comments from President Trump cheering a weaker greenback, the US dollar slid to near four-year lows, but much of that move was retraced in Asia as traders squared up ahead of the Fed. Euro-dollar slipped back below the 1.20 handle, sterling eased after a four-day run, and dollar-rupee pressed back toward its recent peak. Asian equities were mixed after Wall Street's fresh record, with South Korea pushing higher, while Japan lagged. In Japan, the latest Bank of Japan minutes reinforced a gradual path of normalization. Policymakers highlighted the impact of a weak yen and persistent labor shortages on inflation, keeping the door open to further tightening if needed. That helped the yen firm on the margins, with euro-yen drifting lower as traders reassessed rate differentials. Australia was the focal point overnight. Inflation accelerated again, with core measures surprising to the upside and annual core still above the Reserve Bank's target band. That pushed the Aussie dollar sharply higher initially, and three of the country's four biggest banks now expect a quarter-point hike at the February meeting. But as the US dollar recovered into the Fed, the Aussie gave back some of those gains. Turning to commodities, gold's rally extended for an eighth session, pushing beyond 5,000 and then through the 5,200 mark, with prices also firming in India. Mining shares have had a strong run with bullion surge, though analysts are divided on where they go next. Oil is slightly firmer too, with West Texas Intermediate edging above the low 62s on U.S. winter storm supply disruptions. And in the background, Washington is weighing a general sanctions waiver to let energy companies return to Venezuela, following the ouster of Nicolas Maduro, a move that could reshape the medium-term supply picture if it proceeds. On the policy and geopolitics front, UK Prime Minister Keir Starmer is in China with senior executives from Airbus, AstraZeneca, and HSBC, signaling a business-first approach amid tense global trade dynamics. Beijing, meanwhile, approved initial imports of NVIDIA's H200 chips from major domestic tech firms, a selective but notable step as it prioritizes artificial intelligence. Market and sector focus now. The US dollar index has recovered toward the mid-90s, which is leaning against recent euro and sterling strength and tempering the Aussie CPI-driven pop. The yen has a firmer tone on BOJ hawkish signals, while dollar Canada is off recent lows ahead of domestic and U.S. policy decisions. Gold's momentum remains supportive for risk hedges, and crude's modest bid reflects weather-related supply risks more than demand signals. Looking ahead, all eyes are on the Federal Reserve later today, with the Bank of Canada also in focus. The data calendar is otherwise light, so guidance and tone from policymakers will set the pace, while headlines around Venezuela and the UK-China trip could add color. What I'll be watching today: euro-dollar for a potential downtrend if the US dollar's rebound holds post-Fed. Dollar-yen for signs that a firmer yen reasserts on any BOJ Fed divergence. Aussie-US as it digests that upside inflation surprise into the RBA meeting. Dollar-Canada around oil's weather-driven bounce and the BOC tone. And gold where the uptrend stays intact heading into the Fed press conference. The takeaway: markets are optimistic but sensitive, and policy tone today will do the heavy lifting in setting direction. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.